How's it going, guys? Welcome back to the private mentfx mentorship, and this is going to be a quick example and actually something that you yourself can do of putting together a few ideas into an actual trading plan and how to utilize that trading plan using the actual concepts you're learning of here. So this is actually something that's kind of shared on that's kind of shared on the YouTube channel already, the public one, but there's going to be a little bit more depth here and idea behind how you can actually create a trading plan for yourself. And ultimately, on the YouTube channel, as you all may know, there is a 3-box method, which is based in our rules of looking for a break of structure, finding our liquidity, looking for our price to trade into an S&D zone, and then confirming that using either Wyckoff, either double MB, something that you guys use here, either triple M's after Wyckoff or triple M's before, using the grab of liquidity in the form of an engulfing candle, or using any of the other entry criteria available on here that can be utilized across fractal senses. So check out the other course materials, as we have like Cyber Mike or something that comes out with a tank strat or other triple M entry criteria. And all of them are ways of utilizing what we do. Also check out section 5, as that shows you a few entry confirmations. So we understand that this is ultimately the way we look to get involved, and then we look to target the overall liquidity up here while managing our positions inside of here. So now how do we turn that idea into an overall trading plan? Now, why do we call this a 3-box strategy? Because your box 1 is the impulse, your box 2 is the S&D, and your box 3 is the Wyckoff, right? It's a very simple way of thinking about price, and you're gonna see this repeat and happen across every single time frames at all times. What do I mean by that? If we go over to Awanda's price action really quick, because I was just doing it on here, you're going to see across every single time frame, I'm going to show you an example of this very quickly, across every time frame, that this is going to occur. In what sense, right? So let's go ahead and look at this, right? You have some kind of bullish structure here. That structure clearly gets broken and moves to the downside, creating that first box, right? That first move down, and creates this as your liquidity point for the future, which also puts in motion this newly put in S&D zone, which is your second box, right? So box 1, box 2. Okay, so you have a way to look at a price and then look to get involved. But now this is where you can, take something like the rule of 30, which is taught to you for confirmations, and utilize it, right? In what sense? Well, we know we're on a 30-minute chart, and we know that both of these boxes are present. Well, what we're going to do now is ultimately just take that rule of 30, so the 30 minutes, divide it by the 30, so we know that we need to confirm this move right here on a 1-minute chart, right? So if we go inside of this price action and go to the 1 minute, we can go over now as a private mentorship all the ways that you could have actually used to get involved in this trade right here. So we're going to delete this just for a second, and let's go ahead and look inside of here. So very quickly, you can begin to see all our section 5 criteria come in handy, right? We have the tap in, right? And then we start forming a double MB, right? So you can see here's a double MB, another MB, but it never validated, so there was never any sell. So overall, we know as our first step, we can look for Wyckoff, right? So we have highs forming, those highs are getting liquidated, and then we're seeing price break down without the sign of weakness validation. So remember, there's a few ways to look at entry criteria, but let's assume that you chose to use the entry criteria where you look for Wyckoff, you look for that move up, so move up, right? A breakdown of some sort that's showing you that this Wyckoff is being confirmed without a sign of weakness break, and look to get involved in the last up moves before the down moves. That's what's happening here. You're having your Wyckoff play out, right? You're buying climax, your automatic rally, your STs on the inside, your UT, liquidating those STs, or you could have looked at this as an ST making equal highs, your UT here, right? Or this whole thing is a UTAD, and then you get that breakdown. And here's your first break of structure right here, right? And there's your last up move before the down move. That's where you look to enter, or the 50% of it, and you can take that lower. On the other hand, you could have waited for a larger break, like this structural break right here, right? Maybe you're using structure a little bit differently, or looking at, instead of using candlestick structure, maybe you're looking at institutional structure. So in this case, you might be using something like this even, right? So you could look for this break, look at where that break came from, which would be indeed this candle right here, right? But because it got mitigated by that wick, you know that your S&D zone that created that was this wick right here, right? And there you go. You have another perfect entry right there. So this is another example of using entry criteria to get involved, to get into this Wyckoff trade right here, and then take that lower to where? The target of the overall blue move, right? Because if we go back to the paint, our target is this liquidity here. So that means that we'd be targeting this liquidity right here, right? And that already presents a 1 to 24 opportunity right there. Otherwise, you'd be getting in on those higher areas. Right now, let's say you don't like to use Wyckoff or utilize any of this form of Wyckoff. Well, this is where you can go in and utilize any of the other things we teach, right? So again, you could start with using the rule of 30 if you're unsure about what time frames to go to, how low or how high you should be. So instead, you can go here and say, okay, I'm going to use my rule of 30 for the 1 minute, right? In the future, of course, you can get onto lower, but let's find a double MB entry here, right? What move caused the move up into here? Well, it's this one right here. That's your MB1. It gets validated. MB2 begins to be created, right? Trades below it. This could be your first sell stop of a double MB, right? So this is a good example of something that might have lost. Right now, there's also an entry criteria I teach you guys in the section 5, which is taking the 50% of this, because oftentimes a double MB at first will actually be liquidated, right? So if you take that, well, now your entry criteria, right, is this one right here. And that will present to you, again, a beautiful entry using section 5 entry criteria to take it short. Notice how multiple entry criteria can be used to get involved in this same area. What's another example? Well, on another example, you have this MB1 and this right here as your MB2. So that means that as price breaks below it right there, that is your sell stop into that, presenting for you another opportunity to go short and target once again the lows here. Right? Now, if that's not something that's up to your liking, what can you do? Well, we understand that MBs and the way they present themselves in the market are fractal, which means you can instead look at a larger impulsive move in the form of institutional structure versus this candlestick structure MB and utilize this one right here. So what will that look like? Well, here's your MB1. Wait for its validation, which happens right here. Wait for it to start trading back up. Here's your MB2. And now you can sell stop that double MB just like that. And once again, you have another entry criteria that is still getting you involved in this area of price to take yourself lower in this market. Now, let's say you don't like any of these and you want to use something that's even more confirmed. Let's say, for instance, your institutional structure when you were looking at this was actually denoted as this move like this. That means that your MB validation is going to happen at this low right here. So what can that look like? Well, once again, we have an MB that creates this entire move up into our POI. Wait for the validation, which happens right here, and wait for the double MB, which happens on this instant validation right here. And once again, you have a double MB validation to go short, just like that. And once again, you have a target down below to continue taking that short. Now, again, let's say that because of the size of this MB, you don't like the fact that this double MB is so small. What can you do? You can extend this out in time in the form of just drawing out a line like this and allow for price to come a little bit deeper before you draw in your second MB. So as price gets here and then begins to come up and create this entire consolidation range as it's testing the back end of this MB right here. So you can see it testing here. So you could have even used this MB, this last up move, and its validation to get into this short right there, right, with your stop loss right there. And your target once again down into these areas here. Additionally, if that wasn't it, then you could have used this overall double MB in the form of MB1 and this larger consolidation as your MB2 and the break of that, which happens right here, as your next sell stop, to go short on this double MB right here. And again, targeting these lows. Now, let's say you didn't want to use any of those at all. What can you do? Well, once again, we also have the rule of a triple M or of a equal high liquidation with an engulfing. So let's look at a triple M. So let's say we've had this overall schematic play out and price begins to kind of run. Well, we understand that triple M's are fractal and they can occur on many timeframes. And if we know that on some time frame we have a distribution that's beginning to run, we can either A, focus on this specific distribution, looking for a triple M entry, or go to a higher. What will it look like on a 1 minute? So this overall schematic, right, overall gets confirmed when we really get below the sign of weakness. So if you want a really confirmed schematic, well, we know that, the buying climax, the AR, or the AR, the ST, the sign of weakness of B, the UT, right? So we have multiple ways to look at the schematic, but we know there's a fractal schematic in here of some sort, right? So we're gonna basically confirm it once we get below this, or once we create that sign of weakness. So if this is the AR or the SOW, it doesn't really matter, but when it's confirmed is right here. So what can we do the second it's confirmed? That's where we can start to look for triple M's, right? So if we go into there, what do we see? Price has now confirmed a distribution. Price is moving lower, right? Where's our first candle that's a triple M? Is this one? Well, it is, but it's on the bullish side. We're waiting for a bearish one because we're bearish. Then we get this wick up that takes out the previous high's high and comes back down into the range of this candle and closes down here. What does that mean? Well, now we've presented ourselves a triple M. So we enter on the close of that candle with our stop loss just above that wicks high, right? And again, we will be targeting the lows down at the liquidity here, which is, again, remember that higher time frame target right there, which does get met. And again, we've presented ourselves the opportunity to look at a 1 to 18 in this case, right? On the other hand, let's say you missed that. Okay, so if you miss that and you start waiting, there's going to be a triple M entry here. Actually, this one does not get stopped out too, so we can even look at that too. But as you can see, as price continues delivering short, you can start watching it. We get this candle right here, this black one, then this up candle. Then we have this up candle that reaches with this wick. You can see the wick right there above all the highs in here and snaps back down into this range. What is that? Well, that is a short right at the close of that candle with your stop loss right above that high just there, and looking to target once again the liquidity lows present right there, thereby showing you another 1 to 23 potential entry. Okay, now let's say you're a proponent of looking to take a schematic, okay, and then utilizing that schematic on a higher time frame to find the overall move down in the form of a triple M as well, right? So first of all, let's go to a 5-minute chart here and go ahead and find where we were just now. So there we are. We're in this area right here. And again, you can use MB entries, right? So we're not going to talk about it too much right here, but let's talk about a fractal double MB entry. How does that look like? Well, we know that an MB can't be one candle. It has to be more than one. So if we take this low of this candle to this high, that's an MB. Wait for the low to be created. Wait for this trade back up, which is in the form of this right here, which again is confirmed almost the same with that lower time frame MB. That is again a valid short option to go short in there with the stop just above the double MB and to take that short right down. Okay, now if you don't like any of this and you understand now that the schematic has become valid, now you can use this higher time frame to look for triple M's. In what form? Well, once we have the validated schematic on that lower time frame, which as we remember is in this area here, and it begins to go short, right? And you're watching this go. If we watch the wicks, all is good until right here is your first triple M, where the candle reaches above the previous highs and snaps back down inside the range of the down candles, right? So, and if you don't know what I'm talking about in terms of triple M's right now, make sure you check out the webinars and the timestamps. So it closes here. So what do? We sell the close of the candle right there with a stop loss just above the high of the triple M. And once again, look to target the lows associated with the higher time frame bias, which is still put in motion by this overall 3-box strategy as taught on YouTube, or very simply, the structural play that created this liquidity, this SND, now that we're mitigating, right? And that, once again, creates an opportunity for you to get a, what was this? A 1 to 14, right? Now, let's say you don't catch this, right? And let's say price begins to go short and keeps going short. Well, we can continue to watch for the triple M's, right? We keep watching, right? It's creating those lower lows, lower highs, lower lows, lower highs. We're just looking at the wicks, lower lows, lower highs, lower low, lower high, lower low, lower high, boom, 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 and then boom. What do we have here? It reached above the previous candle's highs, or high, in this case a high, but in this case two highs, and it closed back down inside the range of the previous candles. So what does that present for us? A candle closure sell. Okay, so once again, the reason I'm making this video and putting it together for you guys, and again, you target the lows down here, and that's already setting up a 1 to 18. So again, this 1 to 18 on this 5-minute triple M is a higher risk to reward than some of the entries that were up here. Now, the point of showing you this is to show you that there are, one, an infinite amount of ways to actually get involved on a given market, and two, a multi-step confirmation that you can have, or a multi-entry criteria that you can have to get involved. Which means that your job isn't to utilize every single entry criteria, right? Instead, it's to find the ones that work best with your system and your entries and take those in respect to what price delivers. Because as you can see, whether you were a proponent of Wyckoff validation and retest, or if you're a proponent of double MBs, or if you're a proponent of institutional double MBs, or if you're a proponent of triple M's on the same time frame with validation, or a proponent of triple M's on a higher time frame than the validation, or the double MBs on a higher time frame, or the fractalized double MBs, etc. Right? The list goes on and on, or the tank strap by Cyber Mike, whatever your overall criteria is, there is an opportunity presented to you in the way that we consider and think about price and its future liquidity runs. So the point of showing you this is to basically take a step back and recognize that a trading plan is going to be created when you take this overall assessment of a market, an overall assessment of S&D zones that can be validated and then traded into to then go and deliver to liquidity, and then how you want to look to get involved at those points in terms of distribution ranges up here, redistributions, triple M's, double MBs, fractalized double MBs, whatever your entry criteria becomes, right? Or if you don't know what timeframes to confirm, using the rule of 30, because remember, this all started from a simple 30-minute break of structure, return to a POI, right? Our last supply zone, characterized by the inefficiency, which again is taught in section 2, and the move back down to basically catch it all the way down. And even like on this move, you can see, actually not right here, but you can see there are opportunities maybe on like a 15 minute. So even if you stayed on a 15 minute, let's see if there was a triple M. Yeah, there was a triple M right here. So this candle right here on its own, this little one right here, rose above the last high of a candle and created that triple M at the close. You look to stop loss right above that triple M's close and look to take it lower. So again, a down to the low. So again, a 1 to 25 on a 15-minute candle in a 30-minute zone confirmation using the triple M strategy. So what you want to do is you want to pick one of these entry criteria delivered to you and shown to you in section 5 and throughout the sections and webinars and the other course materials, and begin to test it in the format of this type of idea, with the ideal of how you're going to be breaking even on your trades as they start to move, and how you're going to leave a proportion of them to potentially run, because, you know, this price run might not be done. This price could then continue to go short and continue running potentially a higher time frames belief, right? Because on a higher time frame, in the form of the same way that we think institutional structure, so in this case, this whole move down, maybe this is an MB or this is your S&D zone, and then a confirmation to go short, right? Maybe it doesn't get up here to confirm, and instead it keeps going, which means what? You have more targets down lower, and those trades can basically begin to run a lot more than what you might have thought at first, right? So the essence of making a trading plan is, one, is having a few rules in terms of how you're looking at liquidity to be created and how you're looking at structure. And then two, what entry criteria you're going to be using. And I actually suggest you choose one, just one, and test it across timeframes, across a rule of 30, for instance, and continue to do that until you build a system for yourself and the confidence begins to exist. So hopefully you guys enjoyed this. This is a little bit of a snippet as to how you'll be putting everything together and thinking about price. And yeah, guys, this is how you want to start to formulate a trading plan. Thank you very much.